Silver has officially broken below $60. Gold is now close to the $4,000 level. Platinum is falling as well. Oil is lower, stocks are mixed, and the dollar index is sitting around 101.7. That means today's market move is no longer just about precious metals weakness. The US dollar has become the pressure point. Yesterday I warned that gold below $4,100 and silver below $65 mattered. Today those warning levels have moved further. Silver is now around $58.90, gold $4,009, and the market is starting to price something more serious, a deeper Fed and currency shock. Welcome to the 2% Brief. The important point today is this: silver has not just slipped, it has broken a major psychological level. A fall of more than $3 in silver, around 5% on the day, is not a normal quiet move. Gold falling around $110 is also significant. Platinum is down too, which tells us this is not just a silver-specific problem. When the entire metals complex drops together, the question changes. It's no longer enough to ask why silver is down. The better question is, what is the market now repricing? In my view, the answer is the dollar. The dollar index is now 101.7. That matters because gold and silver do not just trade on inflation, fear, debt, or geopolitics. They also trade against the value of the US dollar. A stronger dollar puts the brakes on precious metals because it makes gold and silver more expensive for international buyers and often comes with tighter financial conditions. That is why today's move matters. Now oil is lower as well. Brent crude, $74.60. WTI crude, $71. On its own, lower oil might look helpful because it reduces some inflation pressure. But today, lower oil is not rescuing gold and silver. And that tells us something very important indeed. The market is no longer only focused on the oil shock. The immediate geopolitical risk premium appears to be fading, but the Fed and the dollar are now taking over as the dominant pressure. The market is still digesting a more hawkish and less predictable Federal Reserve under Kevin Warsh. Rates were held last week, but the tone was not soft. The message was that inflation risk has not disappeared, and the market now has to consider whether the Fed may stay tighter for longer than many investors hoped. That is the pressure now sitting on top of gold and silver. Now, if you find this useful, please like the video and subscribe to the 2% Brief. And share this with someone who follows gold and silver. These are the exact market relationships we track here: metals, the dollar, oil, inflation, and what the Fed is really telling us. This is why I keep saying that precious metals are not simple. Gold does not automatically rise because there is geopolitical risk. Silver does not automatically rise because inflation is a concern. The market is always weighing several forces at the same time: oil, the dollar, interest rates, inflation data, liquidity, investor confidence, and positioning. Today, the dollar is winning the argument. The US flash PMI figures add another layer. Manufacturing came in stronger than expected at 55.7, while services came in at 51.3. On the surface, that looks like the US economy is still holding up. But the detail is more complicated. Some of the manufacturing strength may be linked to front-loaded orders and stockpiling rather than clean underlying demand. That matters because if the economy looks stronger and inflation remains sticky, the Fed has less reason to soften its tone. And that takes us to the next major test: Thursday's PCE inflation reading. This is the part I think investors need to focus on. The risk around PCE is asymmetric. If PCE comes in softer than expected, gold and silver may get some relief. The market could start questioning whether the Fed really needs to remain as hawkish as feared. The dollar might ease back and metals could attempt to bounce from oversold levels. But if PCE comes in firmer than expected, the situation becomes more dangerous for metals. A hot PCE reading could push the dollar index towards or through 102 quite easily. It could strengthen the idea that the Fed may need to keep policy tighter for longer or even lean towards another rate hike. In that scenario, gold near $4,000 and silver below $60 become much more vulnerable. That is the key point. Today's video is not just about where gold and silver are trading now. It's about what the market may be preparing for next. The levels are now very clear. For silver, the first issue is whether it can reclaim $60. If silver remains below $60, the market may start treating that old support area as resistance. That would be a warning. For gold, the key psychological level is $4,000, where we are hovering now. If gold holds above that area, we may see some attempt to stabilize. But if gold breaks cleanly below $4,000, the tone could change quickly. For the dollar, watch the 101.7 to 102 area. If the dollar pushes higher from here, it keeps the pressure on precious metals. If it fails and rolls over, gold and silver may get breathing space. And for oil, the question is not whether Brent or WTI are lower. If oil is falling because immediate supply fears are easing, that removes part of the safe haven and inflation premium. But if it's falling because demand fears are growing, that becomes a different warning. That is why yesterday's video mattered. It was not just a reaction to one red day in metals. It was about the warning levels being tested. Gold below 4,100, silver below 65, the dollar above 101, oil moving lower, and PCE still ahead. Now those levels are being tested in real time. This is also the kind of analysis I cover more fully in the 2% brief on Substack. Every Sunday, Inner Circle members receive my full weekly audio and written briefing, where I set out the gold, silver, oil and dollar levels I'm watching before the week develops. The public YouTube videos explain part of the picture, but the Substack brief goes deeper into the scenarios, confirmation levels, and what would change my view. If you want the free 2% brief market notes, use the link in the pinned comment. And if you want the full weekly Inner Circle briefing, you can upgrade there as well. So the message today is not panic, it's discipline. Do not look at silver falling below $60 and assume the whole precious metal story is broken, but equally do not ignore the dollar. The dollar is now the pressure point, and until that pressure eases, gold and silver remain exposed. The next 48 hours matter. PC is soft, metals may get relief. If PC is hot, the dollar could become an even bigger problem. That is the real setup. If this helped you make sense of today's move, please like the video, subscribe to the 2% brief, share it with someone who follows gold and silver, and join the free market notes on Substack through the pinned comment. And if you've not watched yesterday's full briefing yesterday, I would suggest watching that next. It appears on the screen now because it explains how these warning levels started to build before today's fall. Thank you for watching. I look forward to your comments.